Good morning, it's Thursday the 31st of August here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Swiss lender UBS posts record profits as its Credit Suisse takeover looks to be paying off.
The Chinese mega developer Country Garden posts a record loss and warns of default.
Plus, we take a closer look at the fallout from Europe's biggest tax scandal and why the investigation just keeps growing.
Let's start with a roundup of our top stories. UBS has reported record profits in the wake of its emergency takeover of Credit Suisse. The bank made just under $29 billion in the second quarter. CEO Sergio Amotti has told Bloomberg that the size of the integration is unheard of.
This is huge and allow us to really think about how can we now go to the next level. So now we are very focused on integration, on executing our current plans, but we can't forget that the competition and the market is evolving, and we need to stay very focused.
Looking at Amotti's bank outside of Credit Suisse, pre-tax profits are a more modest $1.1 billion after stripping out the acquisition costs and negative goodwill. The combined bank, though, says that it did see $23 billion of deposit inflows in the second quarter, of which $18 billion were at the Credit Suisse Wealth Management and Swiss Bank units.
The Chinese developer Country Garden has warned that it may default on its debt and raise concerns about staying in business. The warning came as the property giant posted a record first-half loss of almost $7 billion. Shahzad Kazim, managing director of China Beige Book, says investors should strap in for more negative news.
I think we get bad property news, more problems with developers, at least for the next couple of years. And we really still haven't found the floor in property prices either. So I think investors should brace for more bad news ahead over here.
The deepening real estate slump in China, mentioned there by Shahzad Kazim, was among a host of negative factors that helped to push down the country's latest economic survey data. China's services PMI dipped to 51 in August, with a reading above 50 indicating a slight expansion in the sector.
A hedge fund founded by two former Citadel traders saw its portfolio drop by a quarter this year. Fifth Delta was the biggest startup of its kind in 2021, but it struggled since then to meet expectations. Data from Bloomberg shows that its peers are up by an average of over 6% this year.
The year-long slump in the UK's private sector is set to continue for at least 3 months. That's according to new figures from the Confederation of British Industry. Bloomberg's Jack Ryan reports.
This is the latest indicator of a gloomy outlook for the UK economy. Businesses surveyed by the CBI say they're cutting back on investment as they suffer from lower demand, cost pressures and higher debt repayments. The report shows manufacturing output falling at the sharpest rate in almost 3 years, while services continue to slide. The findings suggest that the trend is likely to continue in the coming months. But a separate survey from Lloyds is more optimistic, with business confidence surging to an 18-month high in August. In London, I'm Jack Ryan, Bloomberg Daybreak Europe.
In the US, Senate Republican leader Mitch McConnell froze in public for the second time in as many months. The 81-year-old political veteran struggled to answer a reporter's question about his re-election plans.
I'm sorry, I had a hard time hearing you.
That's okay. What are your thoughts on running for re-election in 2026?
What are my thoughts about what?
Running for re-election in 2026.
That's
Did you hear the question, Senator? Running for re-election in 2026?
yes.
All right, I'm sorry, you all. We're going to need a minute. Senator.
The episode raises further health concerns for Mitch McConnell, who is a major fundraiser and force in the Republican Party. His spokesman said that the senator felt momentarily lightheaded and paused during his press conference and planned to consult a doctor.
Sources tell Bloomberg Apple is testing the use of 3D printers to produce the steel cases for some of its upcoming smartwatches. The story from Bloomberg's Charlie Pellet.
It would herald a major change to how the company manufactures products. The technique would do away with the need to cut large slabs of metal into the product's shape. Sources say that would reduce the time it takes to build devices while also helping the environment by using less material. The new approach has the potential to streamline Apple's supply chain and kick off a broader shift. In New York, Charlie Pellet, Bloomberg Daybreak Europe.
Elon Musk's social media network X is planning to gather more data from users than ever before. The network, formerly known as Twitter, says that it will collect biometric data, which can include account holders' retina pattern and thumbprint. X also updated its privacy policy to collect information on account holders' employment and education history. Now let's get to our top story today, the news that UBS has posted the biggest ever quarterly profit for a bank in the second quarter. The CEO of UBS, Sergio Amotti, has been speaking to Bloomberg's editor-at-large, Francine Lacqua. Almost 3 months since closing the deal to acquire Credit Suisse, Amotti says that he's now focused on implementing one of the biggest mergers ever in global finance.
We are going through a massive exercise, the first ever merger between two GCC banks, but at the same time we have to stay close to clients, serve clients, fulfill their expectations, helping them to navigate these challenging macroeconomic and geopolitical times, and so that's the biggest challenge. But I'm very happy the way we are executing on the strategy. We are making very good progress, and we are also looking forward to complete our integration in a speedier way.
Were you relieved that there weren't any nasty surprises?
Yes, I mean, I think that I always felt that this integration is not risky, it's complex. And it takes time, it takes focus, it takes dedication. Of course, we cannot underestimate that the situation at Credit Suisse was as a situation that was clearly indicating that the business was not viable any longer. Credit Suisse has a very strong people, clients, franchises, product capabilities, but the business model was not there. Was not the right one any longer, and I think that the excellence part of Credit Suisse now as part of UBS can flourish and make UBS stronger.
What will happen to the Credit Suisse brand?
The Credit Suisse brand, outside Switzerland, we will phase it out. We may keep it for niches situation, but the brand that we will use outside Switzerland will be UBS. In Switzerland, until the end of 2024, we will keep both brands as we go through the integration of the Swiss operations.
You talk about the complexities, of course. I mean, this is a masterful job that you needed to do. How important was it to really almost get everything done, or have a blueprint today, so that customers, so that a lot of your also employees knew what was going to happen?
Yeah, of course, we announced the transaction 5 months ago. We closed it in June. And so everybody has an expectation that we have an answer for everything. But so we made a commitment, for example, in the Swiss case, where people were waiting for our answers, we made a commitment to go deeper and really analyze every possible options. At the end of the day, we did it as fast as possible. The outcome was crystal clear. The best option is to integrate, and that will help to give at least visibility and about the future to many of our people and our clients. But although nothing will really change between now and 2024 for clients, and we're going to make it smooth for clients to be onboarded at UBS.
How much political pressure are you getting?
No, not a lot of political pressure. I think that's, in general, in Switzerland, I would say people do understand that we were asked to step in to stabilize a situation, and UBS has demonstrated through its strengths in terms of capital, business diversification, and clear strategy that could be part of the solution. So the political environment is quite supportive, also because of the fact that we have been very swift in giving back the guarantees and all the government support when not necessary.
I mean, do you feel like people are nostalgic, about what could have happened? You see, you're very focused, and at the end of the day, this is a business.
Yes, there is an element of which is understandable. I mean, we are talking about a brand and a legacy that has 170 years, was pioneering many of the Swiss economic developments, and so we are not downplaying that. But the reality of today of Credit Suisse is a reality that needs a deep restructuring, and as we go through that, we have to look forward. What is the best for Switzerland? What is the best for clients? What is the best for employees? And there is no room for nostalgic considerations as we do that.
Sergio, when you look at the AUMs and the NNAs, the net new flows, how much of it are actually coming from UBS?
Well, I think that, first of all, I think it's very important to see that already in the second quarter at Credit Suisse, although we had April and May were still negative negative flows, in June they saw positive inflows after the closing, so good momentum, clients coming back. At UBS, we had the best second quarter in a decade in terms of net new money, 16 billion. So quite impressive. And now, as we speak, in the third quarter, we see inflows on both platforms, not only in wealth management, but also in the Swiss bank, and which is a testament on how much clients really believe in our story, and is a testament to the dedication of our people in staying close to clients during those difficult times. And clients are rewarding us with loyalty, and we are counting on taking back as much as possible of the 200 billions that we lost in the last few quarters.
Where's that money coming from? Again, when you look at markets, it's pretty volatile, so it's pretty incredible that you have money coming in.
Yeah, from other banks, or a lot of clients moved away and parked the money in other places, and of course we are able also, despite the fact that we lost some talented people, we are seeing that clients are holding out to their asset with us, and they are not necessarily moving all their assets to the new employer of the people that left. And our focus is really to retain assets and to regain back assets.
Sergio, talk to me a little bit about what that means going forward for example, how you deal with some of the riskier clients. So, the clients that could be subject to sanctions or could be seen as tax evaders.
Well, look, in general, we are continuing to implement our framework in terms of risk profile of clients or activities. Is not dissimilar to the one of Credit Suisse. People under sanctions is a completely different category of people. I mean, there is no room for people who are evading their tax liabilities. Of course, we may have discovered that somebody is arbitraging the system and escaping it, but of course, we have zero tolerance for that kind of business.
How much are you expecting inflows to increase as markets could stabilize because of what central banks are doing?
Yeah, I think that, look, first of all, we are still counting on wealth creation, growth. I mean, if you look at our ambitions, as I mentioned before, we have a dimension of integrating and managing the day-to-day, but also growing our business. And as the economy grows, our clients monetize situations, we want to grow our asset base, our share of wallet with those clients. And again, our focus right now is to regain back as much as possible of those 200 billions Credit Suisse lost in the last few quarters.
So you're basically flying a plane whilst building a new plane. What takes up most of your time?
Building at this stage is a lot of talking on integration, and I keep a little bit of focus also on future growth. I need to almost play around in my time, but the vast majority of my time is on integration, on managing the bank. But I can't really forget that this is one step in the evolution of UBS. And as I look forward, we need to prepare UBS also for the future. So this is something that is very good, because Credit Suisse is not really changing our strategy. It's complementing our strategy. It's accelerating our strategy. We're going to manage 5.5 trillion, or we are managing $5.5 trillion of assets, right, across private and institutional clients. So this is huge, and allow us to really think about how can we now go to the next level. So now we are very focused on integration, on executing our current plans, but we can't forget that the competition and the market is evolving, and we need to stay very focused.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.